Hey traders, welcome back to another daily profit and loss recap video. Today is Thursday, October 5th. I just finished up trading for the morning. I had a red day. I lost $781. And since I show you my winning trades, I of course have to show you my losing trades as well. So in this video, we're going to talk about this loss, explain why I bought into this false breakout, and then give some tips on how to avoid buying a false breakout so that hopefully you'll be able to learn from my mistakes and improve your own trading in doing so. So with that being said, the only trade that I took this morning was with the stock GROM. GROM was gapping up this morning in pre-market. We can see it also had a little bit of a move up yesterday in the after-hour session. But what we were noticing and what was posted in the Market Master group, if we take a look down here at the daily chart, is that there is some resistance right around $2.60 here. And above that, there's a gap to fill all the way up to about $3.70. So this resistance, because there is a gap above it, was going to be key going into today. And I knew that going into the market open. I posted about it in the trade plans and I posted about it in the trading chat in the Market Master group as well. That being said, if we take a look here at the intraday chart, we can see that not only was this holding below that level in pre-market, but we also get a push up into that area right at the market open. And on the 1 minute chart, you'll be able to see that it was kind of initially breaking out above it, failed to hold above it, pulled back to VWAP, and we see these long lower wicks on these candlesticks bouncing off of the VWAP and starting to curl back up towards that breakout level. So that to me was a sign that this might have an opportunity to have a much bigger breakout through this key resistance level. And that was kind of the thought process as to why I was buying into this stock. So as far as when I bought the stock, I missed out on this initial false breakout here. However, once it did start to curl back up and it started to push to new highs, spike through all the way up to a high of 278 with high volume. And then I was buying into this little consolidation period here, expecting it to form a little bit of a base above that past resistance area. And then ideally from there, it was going to rip up towards $3 per share. But the simple fact of the matter is that obviously, not everything is going to work 100% of the time in the stock market, so I bought into this breakout and it turned out to be a false breakout, which led to a $781 loss once it started to sell off here and pull back under the VWAP. So as far as being able to avoid these false breakouts, if you're trading breakouts often, it is inevitable that every once in a while you're going to buy into a false breakout, and most likely that is going to result in a loss. That's just the name of the game, and that is a part of day trading. However, there are some things to look for that can help you to prevent this from happening too often. And one of those I would have been able to apply to this trade today, and I would have been able to avoid taking this loss. So if we take a look here at the initial breakout level, which is going to be the high of this first push here, it is right at $2.68. So this line here is going to represent that breakout level. If we're looking for a breakout above that level, what you want to see is that the breakout candle is actually closing above that breakout level. So this candle here with the high volume spike that pushes through that breakout level first, that's going to be our breakout candle. And if this was going to be a strong breakout, in my experience, a majority of the time, this candle would close above that breakout level. So not only would it spike up to 278, it might close the candle at $2.70, 275, something along those lines. But in this case, it spiked up to 278 and then came straight back down and actually closed the candle just underneath that breakout level. On top of that, like I mentioned, this little consolidation period here is where I was buying into the stock. And another thing that you want to see when you're looking for a strong breakout is that the volume is not only increasing during the breakout itself, but if there is a little consolidation period like we have here with GROM, you want to see that that volume is sustaining and even increasing as the stock is consolidating and as it is setting up for new highs. And in this case, we get that big volume spike. However, the next couple of candles, as it's trading sideways, the volume starts to kind of dwindle back down. So those are two things that I will admit I probably should have taken note of as this stock was breaking out today. There's a good chance I could have avoided taking this loss on this trade if I did. And the reality is that I should have probably been paying a little bit more attention to these long lower wicks here as it was bouncing off of the VWAP, and maybe bought into the dip near the VWAP and then looked to sell up into this false breakout. But I'm only human, no one's perfect, and this ended up being a red day for me. So I hope that you found some value in me recapping this video and sharing some tips that I think can be useful to help avoiding false breakouts in the future. If you did, please make sure to give this video a like and subscribe to the channel. And if you want to hear about these stocks that I'm trading in real time, and if you want to work with our team of traders, get access to our day trade and swing trade alerts, our detailed trade plans, our live custom scanner streams, and so on and so forth, all of that can be found in the Market Master group. There's going to be a link down below in the description for you to get signed up. But anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.